What if I told you that the difference between amateur traders and market legends isn't found in complex algorithms or insider knowledge, but in one critical skill that only a select few ever master? Today, we're diving into the most essential ability that separates wealthy market operators from everyone else. The skill of catching and riding those massive fortune-making trends that emerge just a few times each year. And I promise you, what you're about to discover might completely transform how you approach the markets forever. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Have you ever experienced that sinking feeling in the pit of your stomach? You know the one, where you sold a promising stock for a quick 10% gain, only to watch in disbelief as it continued climbing 300% over the following months without you. That gut-wrenching sensation of missing out on life-changing profits because you couldn't sit still long enough to let your winners run. If you're nodding right now, you're not alone. The market has a cruel way of teaching us its most expensive lessons, doesn't it? Richard Wyckoff, one of the most brilliant market minds of all time, emphasized that this ability to identify and stay with powerful trends is what truly creates generational wealth in the markets. These aren't just minor price movements I'm talking about. These are the substantial, sustained trends that carry stocks far beyond what most traders can even imagine. Has this ever happened to you? You spot a promising setup, take a position, and as soon as you see a small profit, that voice in your head starts whispering, "Take it now before it disappears." So you sell, pocket your modest gain, and then watch in horror as that same stock continues climbing week after week, month after month without you. What Wyckoff discovered through years of market observation was that most traders aren't actually ruined by the market itself. They're ruined by their own impatience and psychological limitations. They mistake constant activity for progress, jumping in and out of positions, while the truly wealthy operators are quietly positioning themselves in emerging trends and simply waiting. Stay with me until the end of this video, because I'm going to break down exactly how Wyckoff identified these massive trends before they became obvious to everyone else. You'll discover why the daily noise that consumes most traders' attention is actually preventing them from seeing the bigger, more profitable picture. Imagine for a moment what your trading account would look like if you had caught just one of the major trends of the past year and held it. Just one. Because that's all it takes to transform your results completely. The market offers these opportunities with surprising regularity, but most traders are too busy looking at the wrong things to notice them forming. If you're ready to master the art of trend identification like Richard Wyckoff, hit that subscribe button now and join our community of disciplined traders who focus on quality over quantity. The painful truth that Wyckoff uncovered through decades of market observation reveals a startling pattern, one that explains why so many intelligent, hard-working traders never achieve the success they desire. It's not that the markets are rigged against them or that they lack information. The hidden truth is far more profound. Most traders become their own worst enemies. This self-destruction pattern manifests when traders confuse constant activity with actual achievement. They jump from one position to another, celebrating their busyness while missing the fundamental transformation that would actually change their results. It's like frantically paddling in a rowboat without ever noticing you're still trapped in the harbor. All that energy expended, yet no real journey has begun. Wyckoff documented this psychological trap repeatedly throughout his career. He noticed how traders would make dozens of small, inconsequential moves while completely missing the major wealth-building opportunities hiding in plain sight. This revelation might feel uncomfortable at first, but recognizing this pattern in your own behavior could be the breakthrough moment your trading journey desperately needs. Think about the mindset shift required here. Our modern world celebrates constant action and immediate results, conditioning us to believe that more trades equal more success. But the market operates by an entirely different set of principles, one that rewards patience over activity, quality over quantity, and disciplined waiting over impulsive movement. Consider this fundamental question: would you rather execute 50 trades that each net you a modest 2% gain, or catch just one significant trend that delivers a 100% return? The mathematics are clear, but the psychological discipline required is anything but simple, because staying in a position as it grows demands something that most of us struggle with: the courage to do nothing when everything inside you is screaming to act. Behind the scenes of every great market fortune is this same recurring theme. The most successful operators weren't necessarily the most active. They were the ones who developed extraordinary selectivity in their opportunities and extraordinary patience once positioned correctly. They understood that true wealth isn't built by capturing every tiny fluctuation in price. It's created by identifying those rare, powerful trends that carry assets far from their starting points and having the discipline to stay with them. This decision to prioritize quality over quantity represents a complete paradigm shift in how most approach the markets. Instead of chasing the dopamine hit of constant trading activity, the masters focus on identifying the truly significant moves, the ones with enough power and momentum to create meaningful change in their financial lives. Now, I want to go even deeper into this topic by examining the most challenging aspect of this entire approach: the psychological fortitude required to simply sit still once you've identified a promising trend. Because the ability to do nothing when your instincts are pushing you to act might just be the most valuable skill you'll ever develop as a trader. If you're starting to recognize this pattern of self-sabotage in your own trading, write "quality over activity" in the comments below. Let me share with you what Wyckoff discovered to be the single most challenging aspect of successful trading. Something that seems so simple on the surface, yet proves nearly impossible for most to master: the profound discipline of doing absolutely nothing. This isn't the passive nothing of indecision or uncertainty. It's the deliberate, conscious choice to sit still when every fiber of your being is urging you to take action. Think about the psychological tension this creates. You've identified a promising trend, taken your position, and now the real test begins. As the position moves in your favor, an uncomfortable pressure builds, the pressure to lock in those profits before they potentially disappear. This internal battle between patience and impulse represents the ultimate crucible, where trading fortunes are either made or lost. The transformation required here is less about developing new skills and more about unlearning deeply ingrained behavioral patterns. We've been conditioned since childhood to equate action with progress, to believe that doing something is always better than doing nothing. Yet in the realm of significant market trends, this mindset becomes our greatest liability. Behind the scenes of Wyckoff's market studies was this recurring revelation: the traders who accumulated vast wealth weren't necessarily the most knowledgeable or the most sophisticated. They were simply the ones who developed the rare capacity to sit calmly through market volatility without abandoning their positions prematurely. This journey toward mastering strategic inaction is made even more difficult by another fundamental truth that Wyckoff emphasized throughout his work: the market doesn't care about your opinions. This might be his most humbling and simultaneously liberating insight. The market doesn't care what you think should happen. It doesn't care about your logical analysis, your careful research, or your strongly held convictions. It will move according to its own forces, regardless of what seems right to you. I've witnessed countless intelligent traders argue passionately with the tape, insisting that a stock can't possibly go any higher, or that a market is obviously overvalued, only to watch in frustration as prices continued their inexorable move in the exact opposite direction of their certainty. The impact of fighting the market rather than flowing with it is catastrophically expensive, both financially and emotionally. Don't miss another opportunity to transform your trading approach. Subscribe now and gain access to more powerful insights that can help you identify those life-changing market trends. Think of the market as a powerful river. You can either struggle against a current, exhausting yourself while making minimal progress, or you can identify which way the water is flowing and position your boat accordingly. The decisions you make in these moments aren't just about this trade or that investment. They're reflections of how you navigate life's uncertainties. What makes this perspective so freeing is the permission it gives you to release the emotional burden of needing to be right about the markets. Instead, you can simply observe what is actually happening without judgment or expectation and align yourself with the prevailing forces. If you found yourself fighting against market movements instead of flowing with them, type "the tape never lies" in the comments. Now I want to go even deeper into this topic by examining what Wyckoff discovered to be one of the most profound revelations in market strategy. The obsession with buying at the absolute bottom or selling at the perfect top is actually a gambler's fantasy, not an investor's. Wisdom. I've seen this destructive mindset create more financial scars than profits for even the most talented market analysts. Think of it like this. Imagine a train departing from the station, slowly at first, then gradually building momentum until it's moving at full speed. The gamblers are those frantically trying to jump aboard while the train is still in the station, risking everything to say they got the best possible entry, or those attempting to leap off at the final destination, often miscalculating and getting hurt in the process. The true wealth builders, they're patiently waiting on the platform, watching for clear signs that the train is definitely moving in their anticipated direction. Then, when the momentum is undeniable, but there's still plenty of track ahead, they calmly step aboard and enjoy the journey. They're capturing what Wyckoff called the fat, juicy middle of the move, where the risk is lower and the profit potential remains substantial. This mindset, transformation alone, can revolutionize your results. It removes the pressure of needing to be perfect with your timing and replaces it with a focus on recognizing established momentum. The beautiful paradox here is that by giving up the dream of perfect entries and exits, you actually increase your probability of substantial profits. But there's another layer to this journey that we need to explore. Even when you've developed the discipline to target the middle of trends, you'll never escape the fundamental truth that markets deal in probabilities, not certainties. This is where your decision-making process needs refined intuition. The market whispers its intentions through subtle signals, increasing volume, changing volatility patterns, shifts in leadership sectors, institutional money flows. These are the breadcrumbs leading to potential opportunities, but they're never promises, only possibilities. The masters of this craft don't wait for absolute confirmation before acting. Then the move is often half complete, with the easiest profits already captured by those who moved earlier. There's a delicate balance here between impulsiveness and paralysis. Wait too long for complete clarity, and you'll forever be chasing markets that have already made their significant moves. Act too rashly on insufficient evidence, and you'll find yourself caught in false breakouts and whipsaws. Finding your personal equilibrium point between these extremes is part of your unique trading evolution. What Wyckoff discovered through years of observation is that successful operators develop a sixth sense, an almost intuitive feel for when the probabilities have shifted meaningfully in their favor. They've trained themselves to recognize patterns that others miss, not because they're seeing different information, but because they're processing the same information differently. If you've experienced that moment where you recognized a potential trend forming, but hesitated to act, type, "I saw it coming," in the comments. This brings us to perhaps the most counterintuitive revelation in all of market speculation. The real money isn't made from the active parts of trading, the buying and selling. The wealth is created during the waiting. This insight completely transformed my approach when I finally internalized it from Wyckoff's teachings. Most people enter this arena believing that success comes from clever entry points or perfectly timed exits. They're constantly searching for that magical indicator or secret pattern that will give them the edge. But behind the scenes of every great market fortune is a much simpler truth. The operators who accumulated vast wealth were those who could sit still once they had identified a powerful trend. Think about that for a moment. The hardest work in speculation isn't analyzing charts or reading financial statements. It's having the emotional resilience to hold your position while the market validates your thesis. It's about cultivating patience, not cleverness. This mindset shift explains why some traders with modest analytical skills outperform brilliant analysts who can't control their impulse to constantly trade. I remember watching a position grow by 30%, feeling that surge of validation and the immediate urge to lock in profits, but the underlying trend was still intact. All the signals that put me in the trade were still present. The hardest thing I ever learned to do was nothing, to sit on my hands and let the position continue working. That single decision ultimately led to a 300% gain instead of a 30% one. The journey toward mastering this discipline is made even more challenging by another fundamental market truth. Prices never move in straight lines. The path of a trend resembles a staircase, not an elevator. Advances, pullbacks, and advances again. These natural fluctuations serve an essential purpose in market ecology. They shake out the timid traders who mistake healthy corrections for genuine reversals. It's during these inevitable pullbacks that most people abandon ship, surrendering their positions to those with deeper understanding and stronger conviction. The psychological impact of watching your position move against you, even temporarily, can trigger primal fear responses that override rational decision-making. That's precisely why most traders never capture significant trends. They simply can't withstand the emotional turbulence. Developing the discernment to distinguish between a normal retracement and an actual trend change is perhaps the most valuable skill you can cultivate. It's not just about technical patterns or percentage moves. It's about understanding the character of the trend itself. Is volume declining during pullbacks? Are support levels holding? Is the fundamental story still intact? These nuanced observations separate those who ride trends to their natural conclusion from those who get shaken out prematurely. Now, I want to explore why our natural human psychology works directly against us in these critical moments, and how you can rewire your decision-making process to align with market realities rather than emotional impulses. If you've ever sold a position during a pullback, only to watch it resume its uptrend without you, type "left too soon" in the comments. One of the most liberating revelations I've experienced in my market journey is understanding that you don't need to catch every move to be wildly successful. In fact, the relentless pursuit of every market opportunity is precisely what keeps most traders trapped in mediocrity. The truth that Wyckoff discovered, which goes against everything modern trading culture promotes, is that just one or two significant trends per year, properly identified and ridden to their conclusion, can make your entire fortune. This insight runs counter to our current environment, where we're bombarded with notifications, breaking news alerts, and can't-miss setups that create a constant fear of missing out. This pressure pushes many into a scattered approach, spreading their capital and attention too thin across dozens of marginal opportunities rather than concentrating their resources on the truly exceptional ones. Think about the consequences of this mindset shift. Instead of frantically jumping from one trade to another, what if you developed the patience and discernment to wait for those rare, perfect setups? The ones where multiple factors align: technical patterns, fundamental catalysts, institutional interest, and sector momentum, all pointing in the same direction. These convergences don't happen every day, but when they do, they often signal the beginning of those massive wealth-creating moves. It's like a treasure hunter who understands that digging hundreds of shallow holes will never be as productive as digging deeply in the few locations where all the clues suggest buried treasure. Your time, energy, and capital are precious resources. The transformation happens when you allocate them where the potential reward justifies the effort. This approach also removes an enormous psychological burden. You're no longer pressured to have an opinion on everything or to be in the market at all times. The freedom to wait, to stand aside when conditions aren't ideal, is incredibly powerful. It keeps your powder dry for when it really matters. And here's another transformative truth that Wyckoff emphasized that few ever internalize. You can be wrong half the time and still accumulate substantial wealth. Success in the markets doesn't require perfection, it requires discipline. By keeping your losses small and letting your winners run to their full potential, the mathematics of speculation work decidedly in your favor. This principle fundamentally changes your relationship with being wrong. Most people approach trading with the flawed expectation that they need to be right on nearly every trade. This creates unbearable pressure and leads to devastating emotional responses when inevitable losses occur. But what if being wrong isn't the problem? What if the real problem is how you respond when you're wrong? The essence of this wealth-building formula is beautifully simple. Cut losses short, let profits run. When you're wrong, acknowledge it quickly, exit with a small loss, and preserve your capital for the next opportunity. When you're right, have the courage to stay with the position as it develops into a significant trend. This balance, this discipline, is what separates consistent winners from perpetual strugglers. If you're starting to see the markets differently after hearing this perspective on quality over quantity, type "less is more" in the comments. Now I want to explore one of the most fascinating insights from Wyckoff's research: how our own human nature actively works against our success in markets. This internal struggle creates a paradox that explains why so many intelligent, hard-working people still fail to capture significant trends despite having access to the same information as successful operators. Our evolutionary programming, the very instincts that helped our ancestors survive, becomes our greatest liability when applied to market speculation. Think about it. We are naturally wired to run toward what feels good and away from what feels painful. But in markets, this instinct consistently leads us astray. We become greedy precisely when we should be cautious, and fearful exactly when we should be bold. The psychological blueprint is almost universal. When prices are rising and everyone's making money, our greed intensifies. We buy more, take larger positions, and throw caution to the wind right at the moment when risk is highest. Conversely, when markets are plunging and genuine bargains appear, our fear paralyzes us. We can't bring ourselves to buy what others are desperately selling, even though this is exactly when the greatest opportunities emerge. Perhaps the most damaging manifestation of this flawed wiring is how we handle winners versus losers. We instinctively sell our profitable positions too soon, eager to lock in gains and avoid the pain of watching profits evaporate. Yet with losing positions, we hold on stubbornly, hoping they'll recover and spare us the emotional sting of admitting we were wrong. This deadly combination, cutting winners short while letting losers run, is the perfect recipe for mediocrity or worse. The revolutionary insight here is that simply reversing these natural tendencies, holding winners longer and cutting losers quickly, immediately puts you ahead of 90% of market participants. It's not about having better information or more sophisticated analysis. It's about having the self-awareness to recognize your destructive instincts and the discipline to act contrary to them when necessary. This brings us to another critical revelation in understanding market movements. Trends aren't random accidents. They're born from specific conditions and forces that build over time. Price doesn't move without cause. Behind every significant trend are fundamental drivers: changes in earnings trajectories, shifts in supply and demand dynamics, alterations in monetary policy, or waves of institutional capital deployment. The price action itself tells this story to those who know how to interpret it. Volume patterns, momentum characteristics, volatility signatures. These aren't just technical curiosities. They're the market's way of revealing the underlying forces at work. While opinions and predictions fluctuate wildly, the tape itself never lies. It shows exactly what's happening in the battle between buyers and sellers without bias or commentary. If you've noticed yourself fighting against your own psychology in your market decisions, type "rewiring my instincts" in the comments. This mindset transformation, viewing price movements as reflections of real underlying conditions rather than random noise, gives you tremendous clarity about when to act and when to stand aside. You begin to recognize the footprints of institutional accumulation before a major uptrend, or the telltale signs of distribution before a significant decline. But let's explore a critical element of success that Wyckoff emphasized repeatedly, one that separates the professionals from the amateurs: the discipline of having a clear, defined plan before you ever enter a position. This strategic foundation is often overlooked in the excitement of spotting what seems like a promising opportunity. But the hidden truth is that most traders fail not because their analysis was wrong, but because they operate on feelings rather than rules. Think about your own experience for a moment. How many times have you entered a trade with a vague sense of "this looks good," but without any concrete parameters for how you'll manage it? Without predetermined exits for both profit and loss, without a plan for what you'll do if the market moves sideways instead of in your anticipated direction. This ambiguity creates a psychological vulnerability that the market inevitably exploits. The transformation begins when you establish these boundaries before putting capital at risk. Knowing exactly how you'll act if you're right, and perhaps more importantly, how you'll act if you're wrong, creates a decision framework that protects you from your worst emotional impulses. It's like having a map and compass before entering unknown territory rather than wandering aimlessly and hoping for the best. This preparedness doesn't just impact your results, it fundamentally changes your relationship with the market. When you have clear rules, the emotional turbulence of price fluctuations becomes significantly less disruptive. You're no longer making stressful decisions in the heat of the moment when judgment is most compromised. Instead, you're simply executing a predetermined plan with clarity and confidence. Now let's explore another crucial truth about capturing major market trends that Wyckoff discovered, one that might fundamentally challenge how you've been approaching opportunities. The reality is that significant wealth-creating trends rarely come from following the crowd. By the time the majority recognizes a trend, acknowledges it, and feels comfortable participating, the most profitable portion of the move has typically already occurred. This creates one of the great paradoxes in market speculation. To catch these powerful trends near their beginning, you must be willing to act when it feels uncomfortable, when your judgment and analysis diverge from popular opinion. Consider the psychological weight of this requirement. You're essentially placing your capital at risk based on a conviction that runs contrary to what most market participants currently believe. That takes tremendous courage and clarity of thought. Behind every major market trend is a period of disbelief when the emerging move is dismissed, rationalized away, or simply ignored by the majority. This is precisely when the foundation for enormous profits is laid. Those who can recognize the early signals and act decisively, despite the lack of social validation, position themselves to capture the full evolution of the trend. If you've ever found yourself hesitating to take action on your market analysis because it went against the popular narrative, type conviction over consensus in comments. As we wrap up our exploration of what it truly takes to catch those life-changing market trends, I hope you're walking away with a fundamental shift in how you approach your trading journey. Remember, this isn't about perfection. It's about patience, discipline, and the courage to act differently than the crowd when your analysis suggests a major move is forming. The principles that Wyckoff discovered nearly a century ago remain just as powerful today, perhaps even more so in our age of constant distraction and information overload. The market continues to reward those who can develop the rare capacity to see clearly while others are blinded by noise, and to sit patiently while others frantically jump from one opportunity to the next. If something in today's message resonated with you personally, I'd be grateful if you'd drop a comment with "catching the big swing," so I know you made it to the end. Your experiences and perspectives help enrich our collective understanding and often reveal insights I hadn't even considered. If you found value in these ideas about patience, trend recognition, and psychological mastery, hitting the subscribe button connects you with a community of thoughtful traders focused on meaningful market moves rather than daily noise. And a simple like helps other traders discover this approach too. Right beside this video, you'll find our exploration of how to properly size your positions when you do identify these major trends. Because finding the move is only half the battle. When you're ready to dive deeper into maximizing your returns while managing risk effectively, that video builds perfectly on the foundation we've laid today. Until next time, remember that the market rewards patience far more generously than it rewards activity. I'll see you in the next video.